Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. Guys, the debt spiral has become official policy. We're going to talk all about it. You're not going to want to miss this one. Really important video. Let's dive in.
Trade Genius.
Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you've not joined our service yet, come check us out, tradelikeagenius.com. Full service. You know, we have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening.
All right, Bob. So I think it's time to address the elephant in the room, and it kind of explains what's going on in the markets in terms of the Treasury's actions and what we're seeing in the stock market, even though supposedly there's no QE going on. What do you think?
Yeah, we're going to show you that QE has been adopted by a new master. But before we get into that, there's a really interesting chart out there that shows basically the bond prices. Bond prices are opposite of yield. And there's expectation now, and we're starting to see it. I got a buy signal for the last week on TLT, is that it looks like there's going to be a surge in the bond price, which means that they're going to try to manipulate down the 10-year yield here over the next couple months. And it's all part of the strategy of not allowing a correction in the stock market before the election. And this next chart we're going to show you this is all Janet Yellen. So if you're poor and broke and can't buy food, can't afford a car, can't afford a house, can't afford medical insurance, Janet Yellen does not have your back. She has the back of all the people that are going to provide campaign contributions to the next election, and she created QE. This is Treasury generated QE. I don't even know what we call it. Maybe we call it YE. Yellen. And you notice the money supply, Phil, and money base has grown. Amazing. And you know how it grew? Really clever. These people, I tell you, don't ever say these guys are stupid. They're notorious, but they're not stupid. They've created a higher money base by creating all this interest that's being generated with the higher interest rates. It's amazing.
Yep.
You know, things that you think are so counterintuitive, that's what they're doing. So, you know, if I had $1 million and I went ahead and stuck it in treasuries, you know, I'm going to be getting my $50,000 of additional cash from the government, and that goes into the money base.
Right.
And then they take the short-term treasuries, right, and they don't have to set aside based on that. It's not restricted. That increases the money base because they can leverage. I think you said, Phil, they can leverage it up to 8x, right?
Yeah, 7 or 8x.
And so that increases the money base.
Yep.
So this is just amazing. And I'm going to throw it back to you and then we'll comment together. You have a couple other charts, but this thing about households too. Look, this people are now like saying they got my back. I'm all in and we got to dance.
Right. And if you look at the dates on this where the household, so if you look at that dark line, right now we're at 48% household financial asset allocation. This is in terms of basically how much money households have in the stock market. And household allocations to the stock market is a horrendously timed trade. They always go in at the tail end of the move, and it's kind of like that FOMO trade, right? But, you know, you can kind of blame Yellen for this because, you know, the actions, the stock market keeps going up. People are like, hey, I got to get into stocks. And so it's actually a sell signal when we get up to these levels. Now, again, this can go on for a few more months, and most likely, as we're going to show you here in a couple other slides, this could persist all the way up until the election. Even though we have data and macroeconomic data that's giving us warning signs, really, you know, all we care about is timing of this thing, right? So if you look at what was said, and this goes back to October 2023, when the markets, our last real bottom in the market, right? Lael Brainerd said, we are monitoring the financial markets closely, the volatility in them. Now, she's used to be a Fed governor. They pulled her into the administration. She's on the Economic Council now for the Biden administration. So they've really got their tentacles around this, the Fed does, in terms of they have two ex-Feds in there now. They have Brainerd and they have Yellen. In February, when we had a bad CPI print and the market had a pretty negative knee-jerk reaction, Yellen says it's a tremendous mistake to focus on minor fluctuations. So it's been bouncing off this, you know, moving average. We like to look at the daily 9 EMA, and if you look at that, every time we've poked our heads under the daily 9 EMA. It's just been a gift in terms of buying the dip and swinging higher. So they're basically handing you a trade, which makes everybody happy. The households are in the stock market and we're going into an election, right? This is all by design. What's interesting too is that this new mechanism of treasuries kind of juicing the market is also, we're seeing headlines like this. This is the ISDA, the Association for Swaps and Derivatives, and they're asking regulators to permanently exempt U.S. treasuries from the supplementary leverage ratio. So what is that? Well, SLR explained is it basically tells the banks how much money they need to keep in their own piggy banks compared to how much they're lending out or investing. So if they're buying treasuries, technically they're lending out to the government, right? Well, what do we have? We have a huge debt problem. So what do we need the banks to do? Borrow more. They need to keep that demand for bonds up. So this rule, normally is there as a guard to keep banks from exposing having too much money out there, messing up their leverage ratio. Well, they're trying to do away with that, right? And so if you connect all the dots, this just means that they're trying to juice things further and further. So, if the banks don't have to count this money that they lend to the government by buying U.S. treasuries toward their leverage supply ratio, then they can lend more to the government. The government can spend more on projects, services, and even stimulate the economy. So, Bob, that is how I think they're going to prop up GDP, trying to go into the election. And I think once you kind of take all this into consideration, it's just one giant QE effort through the Treasury. But, after November, I think that's where you have to be very, very careful. So I think nothing is more worse in markets than just utter complacency. And especially when retail is all in, that never ends well.
Yeah. We had GDP report today. I think it was around 2%, but CPI is exceeding it. And, and this is the thing that's frustrating because they play this shell game with people. They said GDP is growing 2%, where your cost of living is growing 3%. So you're actually falling farther behind. And the people that have money we're way outperforming that, Phil. So our wealth in the stock market, you're primarily Bitcoin, I'm primarily energy, and we're well exceeding the inflation rate. So, in one sense, I'm really happy. In another sense that I'm really, really frustrated because I know at some point the pain this is going to cause is going to be absolutely enormous. And we just don't know when or what's going to happen that's going to cause this whole thing to just disintegrate on us. And it's kind of frustrating, but, you have to play this game until we get a break, and I think we should talk about, our break point. Maybe we'll talk about it on Saturday, Phil, if you're up to it. Let's talk about when we're going to blow out of these trades. I'll show you when I'm going to blow out of ExxonMobil and some of my other names. And you can talk about when we should blow out of the market in general. And maybe we can talk about a little bit about Bitcoin. I know you're a maximalist and you're a hodler, but if you're practicing, hey, maybe I'll take some stuff off the table. We should talk about that too, because we're at that point. Because when it does happen, guys, you literally will sell back 88% of this move, in probably 1/3 the time it took you to get there. Most people are going to miss the first dip because they think it's a dip to buy, and that's the one that's going to really destroy people. So stay tuned for that. In the meantime, we're talking today on Thursday. The markets are closed Friday. We're going to do video Friday and Saturday, but everything's up on my portfolio, Phil. I mean, for the first time in a long time, I don't think I have a single red stock, and I'm all in commodities. It's just absolutely insane. Good news, short term, long term. If the cost of everything that's in the front end of a supply chain is going up, well, guess what the back end is going to look like? It's going to be atrocious. So stay tuned for that. We'll show some charts tomorrow, and then Saturday we'll talk about an exit plan. But to Phil's point, look, unless an event comes out of the blue, I think it's really going to be about every quarter you're just going to have to validate the expectations versus the actuals to see if they can keep pushing this thing forward. And look, with everybody being passive, Phil, you're going to have to get a lot of people to get afraid for them to not be able to push this market up with just very little additional dollars. So stay tuned for that. A lot of opportunities, guys. If you saw our ad coming into this thing, we're actually changing people's lives. We think we have a really good feel for us. These algorithms are smoking right now, and people are just grinding their way to making money. Bitcoin miners are up again today. So there's just tremendous opportunities here for you to exceed, or what they would call getting alpha from the market and getting alpha from the inflation rate. And we'll be able to help you with that. So check out our specials. We got some great ones running until Saturday, and we look forward to seeing you in the room. Thanks, Phil.
Trade Genius.